Hey guys, my name's Jesse. I'm an investor from California. I'm 19 years old. And I just wanted to make some videos about investing and to try to help other people learn more about investing, especially younger people. Because I think a lot of people don't understand kind of how to do it. And so if I can help them do it, I really kind of want to, you know, show them tools and stuff to help them out with it. So first of all, what I would say if you're a young investor is you should look at stocks of companies that you really like. So, like things that you go to the store and you buy all the time, like Coca-Cola or Pepsi, right? If you drink Pepsi or Coca-Cola all the time, then it's probably a good bet that there's a lot of other people drinking it also. Now, that's not the only thing you should base it on. You should go check the financial statements and stuff like that, and that gets a little more complex. But from a basic starting point, just looking at companies for the fundamentals and what they do is one of the best tools to start investing, at least. So Pepsi and Coke are good companies to look at. Disney was another one that I think a lot of younger people can do very well because Disney is a stock where it's very diversified. They own ABC, they own Disneyland, they own, Marvel, Star Wars now, which is over $1 billion. And so it's a great company to own because, for example, now, like even though ESPN and ABC are not doing well, the other parts of the company are doing really well. And so that's the kind of thing you want to own, a diversified company that's able to go out and find the next thing that's going to happen in the industry. So Disney's a really good stock right now for investors. If you wanted to find a stock for you, like, and you only could pick one stock, I think Disney's a great one because it's down. It's down. Let me check. Let's see. So its high was 121, and it just closed today at 103. So that's over a 15% correction, which for the stock market's pretty good. So I might wait for it to come down a little bit because it might come down to lower than 100. But lower than 100, I would look to buy it. I personally started buying it when it was under 100 like a year or two ago. And it's had a big fall because of ESPN and ABC and stuff. But I would go back and buy it because I think it's a really good time to get in if you can. So that's what I would do. Let's see. So that's the first stock I'd look at if you're a new investor. Number two, I'd look at Apple. Apple's a great company. They sell these things. Most of you probably have one. It's $650 to get a new one of these. And most people upgrade within a year or two. So that means every year or two, you're giving Apple $600, $650. And of that, I think the profit's like $300, $250 on each one. So, I mean, and you have to remember, they're selling millions and millions and millions and millions of these. So they make a lot of money on them. And you can benefit from that by buying the stock. And right now it's really low. It's price to earning multiple, which basically just means however much money they earn per share that's outstanding times how much it's worth because there's going to be future earnings. So based on that, it's only at 11.45, which is pretty low. I think a fair valuation is 15. And based on their 2016-2017 projections, they're going to make $10 a share. So multiply that by 15 and you get 150 for a share price in about a year and a half to 2 years, or a year and 3/4. And right now it's at 105.35. It closed today. So that means that it probably has about 40% higher to go, I think, in the next year and a half. And it's also a company that you can really get behind because a lot of you own it. So it's like, it makes sense because a lot of people in our generation really like Apple, especially in America. And in China, there's still a lot of growth. Even if the stock market in China is not doing well or whatever, it's like they can still go in and make a lot of money. I personally own Apple and I personally own Disney, by the way, just to let you guys know. I really like those companies. They're really good. They both pay dividends. They're not that big, but they're really good companies that I think young investors should look at growth, and those are two very big growth companies that you can look at. Another good one that I would look at right now because it's had a big pullback is Under Armour. That's another one I own. Its high was 104 and it's gone down to 80. So that's like a 24% correction, which for that stock is pretty good. Because let's see, from March 6th, 2009 to its high, it's up over 30 or 3,000%, which means for each dollar you would have put in, you'd have $30 back. So it's a huge growth opportunity. Under Armour is, and it's like Nike, but it still has a lot of growth to go. I think Nike's also a good stock, but I don't personally own it. One of the portfolios I manage does own it. Under Armour I really like because it's growth, and when you're younger like me or like someone else watching this maybe, you want to buy something that's more growth oriented, not kind of like already established and gonna keep growing but not like double or triple or whatever. Then you want Under Armour for that. So, but if you're older and you want more of like a solid company, then you can go buy Nike. So those are three of the companies I really like. There's a couple other ones I own. I own Chevron is a pretty good one too. Right now it's kind of gone back up a little bit, but on any weakness, I would buy it again. So like, I would say anything under like 80, I'd buy again for Chevron because the dividend's already almost at 5% again. So if the dividend goes to 5%, you should buy it because that would be about like 85. So like somewhere in there. But because you should buy it because if it's 5%, it's a solid company. People are pretty much always going to use gas. It's going to go down because of more fuel efficient cars and stuff, but people still use gas. Like they're still going to drive, they're still going to go places. And the electric cars, if you go on like cross country trips, I know this, we have an electric car. You can't like recharge it immediately, so you need gas, so that you're still going to have to buy gas. So that's a really good company to buy also. So those are four of the companies I own. The other two main ones I own are Reynolds American, which is a tobacco stock, which is always good because it's the kind of stock that you can like own for a long time because people are always going to smoke. So and it gives you like a 4% dividend, which is really nice too. So yeah. I'm trying to think, what's the other one I own? Apple, Disney, Starbucks. So I also own Starbucks. Starbucks has had a really big run, so I don't know if I'd recommend to buy it right now, just because it's so high. But like it's pulled back 7%. So if it pulls back like another 5 to 10%, you should probably look at it. I really like. It's a great company. Since my original shares are up 40% since I bought them, so those are really good. But those are just some ideas for young investors out there for companies that I would look at to invest in, because the younger you start, the better it is for you. Like, even if you screw up a couple times and make a couple bad trades or don't get the exact percentage you want on your investments or whatever, in the long run, the sooner you start, the better because of compounding interest. It's just like so important that you start now, and that's why I started when I'm like 18 or 19. I'm going to a low-cost college to like save money, and then I'm just investing on the side too. So that's my recommendation for you guys. If you're young, just start investing in the stock market. Look at stocks you like. If you don't have the time to watch your stocks, just go in and buy a index fund which mirrors the S&P 500, which is just a broad base of about 500 stocks. So it basically just goes in line with whatever the American economy does, and that's always been a pretty good investment for you if you've done it. So I would go and do that, and it's like on average it returns between 10 and 12%. So that's not a bad investment, especially if you're not really doing anything. I recommend the Vanguard fund, so it's symbol VOO. That's the one I'd go into if you're not going to buy individual stocks. So that's the end of this video for today. I just wanted to tell you guys some stocks that I thought young investors should look at, and mutual funds and stuff like that. If you guys want, I can put my email down below the video link, so you guys can like send me emails or whatever if you want to. If you guys have any questions or comments, just leave them in the comment section. And if you want any of the symbols for any of the stocks I've talked about today, I'll just put those in the comment section or whatever. So, alright, well, thank you guys very much for your time, and I hope you have a great week. Take it easy.